Monday, February 3rd, market analysis, Stan Ehrlich. Wow. Just after I finished my commentary on Friday, my YouTube, I talked about having a sharp move, substantial move, either up or down. I wasn't very sure because we were at a critical juncture. Obviously, the move was down, which I favored and said so. Um, and we broke pretty significantly. In one case, you'll see it creating an official sell signal. Now, this morning, actually Sunday afternoon for the futures, the market tanked apparently because of the tariff stuff. Now, I'm not a fundamentalist, so that's my educated guess as to why the markets did what they did. But they gapped down in some cases, like the SPY, um, which of course doesn't open on Sunday afternoon like the E-mini and the micro E-mini and the futures contracts, but gapped down very substantially this morning and already has come back up substantially, making new highs since the opening, first minute or few. And in some cases, it's actually closed the big downside gap and then started to ease off a little bit. So let's take a close look. We have not yet come up enough to close the gap in the E-mini, which again doesn't happen very often because this trades 23 out of 24 hours a day during the week. So it only gets a chance to gap up or down over the weekends for the most part. And that's exactly what we did again. And for the last few weekends, we've seen a couple of these, or three maybe. So what have we got? We got a market that went down, challenged a little bit of support. The lows made approximately a week and a half ago, and in some cases broke it and came back up. So support held on a very short-term basis, and we're looking to close some gaps, possibly. Most of the early morning gaps have already been closed, and so we could be ready to start to slip back down again. If we start closing around or below today's lows, it'll be a new low close for a couple, 3 weeks, something along those lines, and adding fuel to the bearish expectations. We do have this double top formation, which now has a little double top over a week or so in the last week and a half. That's basically the second high. The first one was a 2-week trading range, early December through mid-December, and that's the first high. If this double top breaks out to the downside below 58.08, then we have a downside objective of 54.45. Now, I think there's a chance of that. I certainly can't rule it out. I'm basically bullish, intermediate to long term. It depends upon how this double top is handled and whether it breaks out and does what it should do if it breaks out, or the support area is going to hold as we drop down to it again, and we don't have any breakout or false breakout, and it goes right back up to make new highs for the whole trend in February. So either one is okay with me. I just have to figure out whether it's going to actually break out to the downside. And you know something? At the moment, this is so radical, the price action Friday and today, that I think there's a very good chance the double top could work. We're looking at the 5-minute data for the E-mini. It came back up to a little bit of resistance, didn't quite close the gap, which will be getting back to the low of Friday. And it looks like on this 5-minute chart, we are starting to ease off again, starting to slip down about 5 and a fraction points, or 55. Next, we've got the spider. There's a gap to close. We closed most of it this morning, much higher than the opening. And maybe that's it. Maybe it doesn't close the gap completely. Usually they are closed completely, but sometimes almost. And we're starting to come on down again. And here we are. And this is the 5-minute data going back quite a ways to Thanksgiving. So we've got to get below all of this activity in order to break out of the double top for the SPY. and it's a pretty nice looking double top also. Its downside objective would be 542. Going back to the 5 minute, and now let's look at the QQQ. Its gap is still there, but most of it's been closed this morning since the opening, which was, relatively close to the low of the day, at a minor amount of support. So if we don't hold and we start making new lows, we're going to be coming down. And in this case, the QQQ has a head and shoulder top. The neckline's good. The last shoulder high was the 3 trading days of January 22, 23, and 24. This rally didn't do any damage to the top formation. It was a little bit unexpected, but not completely. Remember, there was a gap to go back up and close, which it did on Friday, and then kaboom. That's a heck of a move from Friday's high to today's lows. So I think it's going to start slipping again, and we've got to watch this head and shoulder very carefully. The downside objective is 460. Again, that's not going to change the very long-term bull market picture, in my opinion. And I'm not quite sure whether we're actually going to break out of the pattern or not, so you just have to watch very carefully. So far, it's acting exactly correct. Let's eliminate this little zone here because that gap has been closed real accurately only a week ago. And let's eliminate that little marker up there because that gap has been closed also just on Friday. Gaps are almost always closed. There you go. Done. So, looking for more weakness. But I'm not going to be very surprised if the neckline holds and the trading range goes sideways more, and then we see another strong February or March. But the head and shoulders so far so good, that's got to be my concern at the moment, and not concern, just trying to make it work correctly. Next, you got the 5-minute data on the QQQ. And, could rally a little bit more to finish the gap closure. Closing below 500 essentially is what we need to have a downside breakout. Next, NASDAQ has a last shoulder high. Those 3 days, January 22, 23, 24, the rally on Friday didn't do any damage to the formation. The first shoulder has a bearish engulfing ER sell signal that's red right smack on top of the shoulder. We got overbought. The timing is right. The location, price levels of the shoulders are very normal. The neckline is relatively flat, just upward slanting a slight bit, classic. And here we have a downside objective of 18,930. If the NQ continues to break lower and close below the neckline. Bouncing back a little at the moment. And here's a 5-minute chart on the NQ. Currently plotting the March contract. These are all continuations. And they roll over automatically to the next contract month. So maybe this rally this morning is done. I'm not quite sure yet, but I favor it starting to slide awful soon. A little bit more of a rally or not. Next, we had a bearish engulfing ER sell signal on Friday, and it turned price action red with my custom code and strategy, ER signals. Dropped like a rock today, made a minor new low for a week and a half or so, 2 weeks. Popped back to close the gap awfully accurately, just a few extra ticks, and I think is on its way back down. By the way, we got short, of course, an ER1 and ER3, ER1 overnight, scalping overnight. The scalp made a little bit of money on Friday, and I'll spread this out so you can actually see the trade lines more accurately. There's the trade line and the trailing stop for the one scalp, selling short at about 44,779, getting out a couple of minutes before the bell rang. Our ER1 overnight got shorted exactly the same reason, exactly the same price, exactly the same time. We held it overnight, and wow, this morning, huge, and got out reasonably well. Profit on that one as well. Now let's go look at the Russell. It popped up on Friday right up against resistance in a major resistance area and a minor resistance area also. I'll drag that to the right a little bit more. Kind of like that's good. Stop. Cold turkey had a bearish engulfing. Too bad it wasn't overbought. I would have had a red signal and crashed today at one point into a support area. Bottomed out. Now I know this kind of looks like maybe a head and shoulder bottom, a little bit lopsided timing wise. Otherwise, you could draw a neckline across the highs. I don't think that's going to happen. I think we're going to go a little more sideways. No gap to close anymore. That's, done. And make new lows and head to the bottom probably of this red support area, which is 2113, maybe even a little bit lower. Now, here's the Russell 5-minute chart heading down a little quicker, faster than the other indexes. Bonds have a broad double bottom potential October 23 of 23 and a bullish engulfing buy signal on the low day. Wow, what a signal. We also have had on the low day again on January 14th of 25, another bullish engulfing ER buy signal. So far, wow, great. It looks like we're going to close at the most profitable levels we've seen so far for that trade. We made a new high already. The head and shoulder bottom, which started on the December 26th date with a bullish ER buy signal on the shoulder and on the head of the formation. Unfortunately, the last shoulder, we didn't get one. But the neckline has not been violated, and I'll spread this out so you can see the pattern a little bit better. And that's good. So we broke it on the upside, January 27, came back to support, okay, made a new high, but not yet. Drop back down a bit, right to the neckline again on Friday, and now a new high today. With a potential new high close, I'd like it to be above the previous rally high on Thursday of last week, but maybe we'll just do that tomorrow instead of today, but sooner the better. We are still long from an ER1 overnight, which I'm not showing you, but also an ER3, which bought the exact tick low of the day on January 15th, right there, and it was 110.30. Oh, was it 110.30 or 111.30? I thought it was 110.30. Yeah, 110.30. Fantastic. Low tick. And we're still long from that low tick. Day after the bottom of the market occurred. All automatic, 100%. All code, all an algorithm. What about notes? Notes have also a possible 1.5-year double bottom formation. It looks a little better in fact than the bonds. It had a head and shoulder bottom, but it's had problems. I don't know. I don't like the fact that it toyed with the neckline. I've been talking about this for several days. A little bit above it, a little bit below it, a little bit more below it, a little bit above the neckline, a little bit below the neckline on Friday, and now we're back up to the neckline. That really shouldn't happen. Once you get above the neckline on a closing basis, you're supposed to stay at or above it, and frankly, just start trending its way up with one, usually, downside correction toward or maybe touching the neckline and back up again. In other words, break out, back up a little bit, and then new highs. So this is not cooperating in the last approximate 6 trading days, including today. So is it a head and shoulder bottom acting funny the last 6 days or not? I'm going to leave the pattern outline details on the screen for another day and see if we can't get this damn thing to pop up really strongly. We do have a bullish engulfing today, so I do expect it to start to trend higher again. But it just got, very fuzzy here and very unusual activity when it shouldn't have. So this is quite questionable. But so far, we'll see. Next, crude. Dropped down to support, still around there, but this is after it popped up on the opening and then pulled back down to support. So I don't know. This thing is trying to hold very nicely in the last about 6 days. Right around a previous bear trend line, which is now a support line. We were trading above it and came down to it. Not particularly accurately. I wouldn't be surprised to see this drop off more, but we came close to oversold, and it does look like it's putting some decent effort into bottoming out. I'm going to have to wait for maybe a day or two before I get more confident about speaking up about crude oil. I favor slightly a little bit lower. Next, heat. Holding the rally, new highs for a week, staying fairly strong, and it did already get below the equivalent same bear trend line. In this case, the top of a downward sliding channel for a long time, over a year. And it's so far after the test of the line, getting below it a little bit. Now we're back up above it again. And if we can stay that way, we're probably going to start to work its way higher. Now, that really doesn't jive very well with my crude oil slightly bearish expectation when heat's going up. Hey, I've seen weirder things happen. Next chart is natural gas. We are making a minor new low. We are not, I'm sorry. Today, that was Friday. Today we gapped up and left a gap behind so far, but this head and shoulder top doesn't have any problems so far. You broke out on the, where's my cursor? Just a second. Crosshair and go for it. Okay, we broke out on the close of January 28th, couple of 3 days down, and today we rallied up to the neckline almost precisely. This is a textbook price level at the neckline from down below coming up to it. Classic place to sell short. Low risk, stop is a little above the neckline. Your new short offer is just a hair below the neckline. So far, you have a small teeny weeny profit, not dropping off so much as to imply that you shouldn't consider going short, because we're still very, very close to the high and low risk. If you're right, it's going to go down, close the gap, and not stop, and keep on going to the minimum downside objective of 2.395. Big move. Very, very worthwhile. So the risk here is small. The profit potential is much larger, and there's a variety of reasons to think it could work. So I like the short side of the market right here, right now, or, a little closer to the high of the day, but can't turn the clock back. You can't do that. Next. So I'm bearish on natural gas. Next, gold. Bearish engulfing almost. We have overbought conditions on Friday and today and an outside trading range. But right now you're higher by 22.6, and that's a bullish engulfing. But wait a minute. Remember, I have something called the Bass-Ackwards reversal, and this is it in front of you. If it closes higher, you're overbought with an outside up day. And occasionally, I wish I could say I could pin down some good statistics for you. This is actually a bearish engulfing. No, it's a bullish engulfing that turns out to be a bearish signal because it's overbought with the outside trading range combination. If it closes lower, that is going to turn it red. It'll be an official sell signal. There'll be nothing wrong as far as I could tell. And we will be starting to head south, which I do think is about to happen. Now, yes, I don't expect a bear move of any major. So test the old bear trend line again, which is now support on the way down. The upside objective is about 3,000 to 3,100. You can measure it two different ways for this fairly normal sized pennant of about 3 months. And I'm basically bullish, but this tells me that there's going to be a little correction before it starts to head higher again. Next, we have silver. It's resistance area, almost overbought, not quite. And today, it's up a little bit. I think it's trying to stall out here and have a bit of a correction. We'll see. Otherwise, hey, you did have a downward slanting wedge, channel, pennant. They're all about the same. And normally those are bullish patterns. So eventually I'm looking for the resistance area above the market to be broken and for this to make new highs. But I do think in the meantime, it could dribble back down slightly, maybe for a few days, a week, week and a half. And we've got a whopper of a brand new sell signal in platinum today in a resistance area, overbought for the 2 previous days, and bingo, huge. Now, I also want to point out that we had a bearish engulfing ER sell signal on October 30th of last year that was the top of the market at the time. Great. And we had another bearish ER sell signal May 20th of 24 also. This is the third, I hope, third time, not proven yet, signal, all similar, looking very promising, but you never can tell. Past performance is not indicative of future results, and hypothetical returns has some inherent limitations. The normal NFA CFTC disclaimer, National Futures Association and Commodity Futures Trading Commission. So I'm bearish today, as of. I was looking for this because it being overbought and in a resistance area, and I got my wish. Let's just keep going back down. I think into the support area easily 960 to maybe 910-ish. Next, that bearish engulfing for almost the same reasons worked out very, very well. So far, so good. And today is another new low for the move down in high grade copper. Great. Still bearish, but looky here. This is a bullish engulfing at the moment, and we are currently holding near the high of the day. Not oversold, therefore it can't turn green, but the fact that it's a bullish engulfing does imply that we're going to have a little strength. So are we going to go back up to the resistance? We're going to go back up to the highs of that bearish engulfing on January 17th, something in that ballpark. And then we'll see what happens. I kind of favor topping out and turning back down, but we'll see. Soybeans, oil meal, corn, wheat, and then we got cattle, hogs, and a stock. So I've been trying to justify on a long-term basis a major bottom in the grain complex off and on for many months. And I'm getting a little bit more confidence slowly. Today we have a bullish engulfing, and that's good for my expectations. Now, being Monday, I think there's a good chance maybe by the end of the week or very soon, we're going to see a new high for the trend here. That's going to be very profound because it's going to break out to the upside, break above the highest high between the two lows, meaning the low area in late August and the lows that were made in the middle of December, breaking out above that 1081 or so price, which is not too far away, is going to create a minimum upside objective if everything works properly of 1186. And all of that bullish activity is just going to fuel the fire toward long-term bull move. Breaking, staying above long-term previous bear trend lines has already started to happen. I'm looking for huge support resistance areas to be tested, and that would be around the 1190 area, which is the objective in the first place of this double bottom. Then we'll see about even higher after that. Next, same principles, same general comments, soybean oil, double bottom formation, holding a support. But today, we did make a minor new high since early November. And now, for the first time, poking against that resistance area again. And let's see if we can get up above 49, and in particular, the high of the red bearish engulfing on the high day. These signals happen real time. And you can go back to these dates and watch my YouTubes and see what I said. But they happen real time. And if they happen while or before the YouTube on that particular day, then they're going to be on the screen and I'm going to talk about them. Or if they happen after the YouTube, then I talk about them the next day. We just got overbought today, up against resistance. The implication is a minor pullback. We might just dribble back down to 44 again. But overall, this looks like a large bottom formation developing. I've seen better, but I like what I see on a month-to-month-to-month basis starting back in May of 24. Bullish long-term, cautious short-term because of overbought. Looking for a really good buy signal. Next, meal, basically the same comment. Triple bottom, starting back in June of 23, you got lows, and you got March of 24, and then you've got December of 24. Those three major bottoms. Today we've made some minor new lows for a couple of weeks, but we're higher on the day right now. So we're bouncing out of support and starting, I think, to work our way back up to about 320. And if you can break above that high when it got overbought on January 2nd, that would be very constructive to much more of a rally, probably all the way up to and maybe even over that major bear trend line. And we've got corn, which has already done a lot of what I've been talking about on the other grains. Beans, oil meal. It's made new highs since approximately June of last year for 6 months plus. It had a head and shoulder bottom that had worked great. The minimum upside objective has been met and surpassed by a little bit. And now we had a day or two down. Today, you've got a bullish engulfing coming up out of a support area. Great wide range. It did close a little gap that we had from Thursday to Friday last week. Gaps are almost always closed, and there it is. It's a closure just 2 days later. So I am very constructive on corn longer term. We need to break the next resistance area at 515, 514, which could happen pretty soon, maybe a week or two this month. And that would just fuel the long-term bullish fire. Now, there is one other possibility, and I'm not ruling it out at all. We could come down to 457 before we start to trend higher, which would possibly make another last shoulder on a compound head and shoulder bottom. This whole mess here from July, August, September, October, which is, and past tense worked, it was a head and shoulder bottom by itself. You know, we got a signal on the first shoulder low. We got a signal on the last shoulder low. Unfortunately, not quite a bullish engulfing on the bottom. We missed that by one damn tick. The low on this day was not 395. The low the previous day was 395. All we needed was a low one tick lower than 395 on August 27th, and this would have been green, and I would have caught, my system would have caught all three turning points on this pattern. Not just both shoulders, but also the head. Doggone it, missed by a tick. Anyway, c'est la vie. Now, obviously, I'm thinking possible dip, but bullish engulfing today says probably not. Steady and higher, continuing to get stronger. No giant head and shoulder for over about a year. Instead, just simply up we go. Wheat, coming off of a double bottom potential, has a bullish engulfing at the moment on the day, up 8.5, outside up day, and a minor new high for about a month and a half, maybe 2 months. I'm liking what I see. It's starting, but it's kind of the late symbol of the grains, like meal. That's kind of not too far away from its major lows. But this is how it begins. I'm liking this bullish engulfing today. Looking for a move up probably to, I think 630. So what about cattle? Uh-oh, we have a bearish engulfing, brand new sell signal today in cattle. Remember, I was threatening to change to a vegetarian as this thing was going straight up, getting beef very expensive. But we did top out, unfortunately, no signal, except we got one today. These signals do not always occur on the high rallies like that one, or on the low breaks or close to it like that one, and that one, and that one for the bullish ones. So I'm not surprised. I think we're going to go down. This emphasizes the likelihood it's going to go down maybe a little bit more than I originally mentioned. Minimum 196.5, probably now a little more likely 192. Hogs, big down day, almost making new lows, not oversold yet. I think it's going to crash below these support level lows in the last month and a half and get much further down into the support area, maybe down a little bit below 82 before it starts to turn back up. but watch for oversold conditions. We are low and last and dropping into new lows as I speak. So watch out. It could make new lows here and hit a lot more sell stops anytime before the close. Now, the XYZ has a multiple year major long-term bottom we broke out of in November, rallied up to a high 99, psychological resistance just under 100, came back to major support, and I think generally speaking it's on the way up. Now today we're down 67, but come on, I mean the other stock market indexes are getting clobbered here, so I'm not surprised that it's having a little trouble. But I don't think, if I'm right about the other indexes going down quite a bit, that this is going to go down that much. I think it's going to hold fairly well and maybe even go the opposite way of the indexes. Nothing wrong with that. It just would have a super good amount of strength if it could do that. So I am neutral to bullish on XYZ, which used to be called SQ. Next, E-mini update, 5-minute chart, starting to slip a little bit. Nothing definitive as far as I can tell. You guys have a great day. Profitable trading to you.